Assalamualaikum. We are from a group 6 and for this presentation, we have chosen the topic medical takaful. First, let us introduce our group members, Ainin, Sofia, Nur Amira, Atilia, Munishwari, Nadia Hanim, and Aliza Darina. In this presentation, we'll be explaining about medical takaful in Islamic law of insurance.
Assalamualaikum and good day everyone. So today I will start the presentation with the introduction of medical takaful in Malaysia. So medical takaful is a Sharia compliant healthcare protection scheme that provides coverage for hospitalization, surgery and also critical illnesses. It is based on the principle of mutual assistance or known as ta'awun and also donation which is known as tabarruk. Unlike conventional insurance, medical takaful operates without riba, gharar, and also maisir. So in Malaysia, it is regulated under the Islamic Financial Services Act 2013 and also being supervised by the Bank Negara Malaysia.
Assalamualaikum and good day everyone. Today I will present on the scope of coverage of medical takaful. Medical takaful is a Sharia compliant healthcare protection plan that helps individuals manage medical expenses during illness, accidents, disability, and hospitalization. It is based on the principles of ta'awun and tabarruk, where participants help one another through share contributions. The first coverage is hospitalizations and surgical coverage. This includes hospital admission, medicine doctor consultations, laboratory tests, and surgery costs. Participants may also receive daily cash allowance during hospitalization. Next is critical illness coverage. Medical takaful provides protection against 36 critical illness such as cancer, heart attack, stroke, and kidney failure. Participants may receive financial assistance or lump sum payments for treatment expenses. Lastly, emergency treatment coverage includes ambulance services, ICU charges, emergency treatment, and overseas emergency medical coverage. In conclusion, medical takaful helps reduce healthcare financial burdens while promoting mutual cooperation among participants.
Next, I will explain the comparison between medical takaful and also conventional insurance. First, in terms of basic concept and principle, medical takaful is based on the principle of mutual cooperation and donation, known as ta'awun and also tabarruk. Participants contribute to a shared fund to help each other during medical emergencies. In contrast, conventional insurance is based on risk transfer, where policyholders pay premiums to the insurance company in exchange for protection. Second, regarding Sharia compliance, medical takaful follow Islamic principle by avoiding prohibited elements such as riba, which is interest, gharar meaning uncertainty, and al-maisir or gambling. On the other hand, conventional insurance may involve this prohibited element and does not specifically follow Sharia principle. Lastly, for fund management and ownership, in medical takaful, the contribution belongs to the participant and are managed by the takaful operator. However, in conventional insurance, the premiums become the property of the insurance companies and the profit mainly benefit the company and its shareholder. That's all from me. So next, move to the next part.
So one example of a medical takaful provider is actually Etika Family Takaful Berhad. So this company offer plans such as Etika Medical Plus, which cover hospitalization, surgery, critical illness, and pre and post-hospital treatment. So Etika use the hybrid wakalah mudarabah model and also provide cashless treatment at panel hospital for an easier claim. So this shows how medical takaful provides healthcare protection while maintaining Sharia compliance for their participants.
I'm Munishwari Sangapillai. Today I'm going to present about operational models. First is Wakala model. Operator acts as an agent to manage takaful fund. Participants contribute through tabaru donation. Operator receives a management fee, promotes transparency and accountability. Second is Mudaraba model. It's based on profit sharing. Participants provide capital, operator manages investments. Profit shared according to agreed ratio investments must be Sharia compliant. Third is hybrid model, combination of wakala and mudaraba, most common model in Malaysia, balances efficient management and investment returns. Used by operators such as Prudential BSN, Takaful, Great Eastern Takaful, and AIA Public Takaful. Second, regulation, governed by Islamic Financial Services Act 2013 and supervised by Bank Negara Malaysia. ensures Sharia compliance, transparency, and consumer protection. There are four advantages of medical takaful. First is Sharia compliant. It's free from riba, gharar, and misir. Investments follow Islamic principles. It is also supervised by Bank Negara Malaysia. Second, financial protection. It covers hospitalization, surgery, and critical illness. It reduces burden of rising healthcare and costs. Third is mutual assistance, ta'awun. Participants help each other during medical emergencies, promotes cooperation, compassion, and social solidarity. Finally, surplus sharing. Eligible participants may receive surplus from Takaful Fund. It is also encourages fairness, honesty, and transparency.
Navigating a medical takaful claim generally follows two distinct paths, a seamless cashless facility or a manual reimbursement. Let's break the process down into four essential steps. Step 1 is notification and verification. For a standard admission at an approved pen hospital, you simply show your takaful certificate to activate the cashless facility. The hospital will then contact the operator for a guarantee letter. However, if it's an emergency or a non-penal hospital, you must stabilize first and pay upfront. Step 2 is documentation submission. For manual reimbursement, you need to collect and submit all original hospital bills and medical claim forms within the operator's strict timeline, which is usually between 30 to 90 days. Step 3 is the claim audit. To keep the community risk pool financially sustainable, the operator audits the bills against the standard reasonable and customary charge benchmark. They will also calculate any co-takaful deductibles you owe. Finally, the step 4 is approval and payment. Approved cashless funds are paid directly to the panel hospital. For manual reimbursement claims, your money is securely deposited into your bank account within 7 to 14 days of working day. While the Takaful system is beautifully built on community support, it currently faces three major modern challenges that impact participants. First, we have rising contributions. Because Takaful rates are non-guaranteed, monthly pricing can adjust upward for the entire group whenever total claims exceed the money left in the Tabarruk fund. This can cause sudden financial strain for lower income families. Second, medical inflation. Driven heavily by the rising cost of imported pharmaceuticals and advanced surgical tools, private healthcare costs in Malaysia are climbing by staggering 15% annually. This heavily burdened the risk pool, forcing constant pricing adjustment. Third is general lack of awareness. Many consumers wrongly view Takaful as just a Muslim version of a conventional insurance. They miss the core principle of ta'awun, which means mutual assistance and risk sharing, and often mistake necessary fund protection for corporate profit seeking.
For recommendation, Takaful operators should improve claim procedure by using AI technology to audit hospital bill instantly. This helps detect overcharging and unnecessary treatments in real time, making claims faster and more transparent. Besides that, the Malaysian Takaful Association should create a unified digital portal so hospital and operator can access patient information quickly. This speeds up guarantee letter and reduce fraudulent claim. Next, participant eligibility should become more flexible. Operator can introduce head-linked trackers using smart devices where participants with healthy lifestyle receive contribution discount. Higher risk individuals should not be rejected completely but placed in under co-payment plan instead. In addition, senior citizens above 60 years old should still be allowed coverage through structure and entry tiers with limited benefits and small deductible. This ensure that elderly participants still receive essential protection. For the case study, the first case is Muhammad Habizan bin Muhammad Yusuf and Prudential BSN Takaful Berhad. Involved a 3 million Takaful claim rejected because the participant gave false income and employment information. LHDN and SSM records prove that the statements were untrue. The court ruled that Prudential BSN Takaful have the right to cancel the certificate due to the material misrepresentation under IFSA 2013. This case showed the importance of honesty in Takaful applications. The second case is M Malaysia Holding Berhad, and ORS and Transnational Insurance Broker Sendirian Berhad involved an employee whose Takaful coverage was supposed to increase from 1 million to 5.9 million. However, medical reports required for approval were delayed and the employee passed away before the underwriting process was complete. The court ruled that only the original 1 million coverage was valid because the upgraded coverage had not officially taken effect.
So, in conclusion, medical takaful is actually an important Sharia compliant alternative to conventional insurance in Malaysia. It helps provide financial protection for medical expenses while promoting mutual assistance and ethical values. However, challenges such as rising medical costs and contribution rates still exist. Therefore, continuous effort by the Bank Negara Malaysia and Takaful operators are important to ensure the sustainability of medical takaful. Thank you.